Would you like to profitably invest in the increasing digitization of life? Want to collect a market-beating dividend from a company that owns and operates critical internet infrastructure? Like the idea of future-proofing your investment portfolio? Then you have to check out today's video. Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. I want to tell you about a high-quality stock that pays big, growing, reliable dividends. These growing dividends are funded by growing profit because this business owns and operates some of the most critical networking infrastructure out there. Ever heard of data centers? You know, those centers that contain vital servers without which the internet would cease to work? Yeah, there's a lot of profit to be made in owning and operating those data centers. And this company is one of the biggest and best at doing just that. I've personally invested in stocks just like this one on my way to going from below broke at age 27 to financially free at 33. Best of all, the stock looks undervalued right now. Price is what you pay, but value is what you get. Why is that important? Because buying a dividend growth stock when it's undervalued should provide for a higher yield, greater long-term total return potential, and reduced risk. With this in mind, I want to share with you an opportunity I recently came across in shares of Digital Realty Trust, Inc., which appear to be trading at a significant discount today. Digital Realty Trust, Inc., stock ticker DLR, is a global real estate investment trust that owns and operates data centers. Founded in 2004, Digital Realty Trust is now a $38 billion by market cap data center juggernaut that employs over 1,500 people. The real estate portfolio of over 280 data centers is spread out across more than 20 countries worldwide. These purpose-built properties are strategically located for their networking capability. They work with over 4,000 customers, with some of their largest customers being the likes of IBM, Facebook, Oracle, and LinkedIn. The digitization of many aspects of life has been playing out over the last decade. Life has changed immensely over this period, and it continues to change immensely. The internet is now a vital part of most people's lives, and with the Internet of Things spreading everywhere from smart appliances to self-driving cars, our future is going to be more digital than it's ever been. AI, data, cloud, IoT. This is our future. Some companies will benefit from digitization, some will be at a disadvantage. Digital Realty Trust is most certainly in the former camp. Digitization directly works to the advantage of companies that own and operate data centers, as these centers act as critical infrastructure to the global flow of information through interconnected network. Digitization doesn't happen without data centers. The company was in a great position before 2020. They're in an even better position now. That's because the pandemic has accelerated digitization. For example, the pandemic has resulted in more companies adopting a work-from-home model for their employees. This was probably an eventuality, but there's been a forced move in this direction over the last year, and Digital Realty Trust is in the position to benefit more than ever from the accelerating evolution in the way people live, work, and play. That bodes well for the company's ability to increase its profit and pay out a rising dividend to shareholders. Already, Digital Realty Trust has increased its dividend for 16 consecutive years. The 10-year dividend growth rate is 8.6%. That's a very strong dividend growth rate when paired with the stock's current yield of 3.2%. This yield blows away what the broader market offers. It's also not far off of the stock's own 5-year average yield, and with a payout ratio of 73.1%, using the midpoint of fiscal year 2020 core funds from operations per share guidance, the dividend is quite secure. This stock offers a safe, market-beating dividend that's growing at a high single-digit rate. This is what I consider the sweet spot for dividend growth investors. Looking at business growth, Digital Realty Trust has increased its revenue from $865 million in fiscal year 2010 to $3.209 billion in fiscal year 2019. That's a compound annual growth rate of 15.68%. Obviously, that's extremely impressive. However, we have to keep in mind that top-line growth from a REIT can be somewhat misleading. A real estate investment trust like this often funds absolute growth via debt and equity. The dilutive effect from equity issuances can lead to a pretty large divergence between top line and bottom line growth. Indeed, Digital Realty Trust's outstanding share count has more than doubled over the last decade. As you might suspect, it's far more insightful to look at profit growth on a per share basis when dealing with a REIT. And when looking at per share profit growth for a real estate investment trust, you want to look at funds from operations instead of normal earnings. Funds from operations measures cash generated by a REIT. It adds depreciation and amortization expenses back to earnings. The company is increased its funds from operations per share from $3.39 to $6.66 over this 10-year period, which is a compound annual growth rate of 7.79%. Still rather strong, but we do see that drop from revenue growth. Looking forward, CFRA currently has no 3-year funds from operations per share growth projection. That's unfortunate, as I like to compare that projection against a historical baseline for these analyses. However, there's a specific note from CFRA that accurately sums up the investment thesis and near-term growth outlook for Digital Realty Trust. And I quote, DLR will likely continue to benefit from high occupancy levels and its diverse customer base. We see modest rate increases as demand growth continues to outpace capacity growth in a number of markets, unquote. In my view, investors should expect future growth that's at least in line with what's occurred over the last decade. I say that because digital realty is now a larger and arguably better than it was 10 years ago. They've scaled up in a big way in recent years, and scale in this arena matters very much. Significant acquisitions have included DuPont Fabros Technology for $7.6 billion in 2017, Ascenti for $1.8 billion in 2018, and Interaction for $8.4 billion in 2019. Plus, there's the fact that digitization of most aspects of our lives has been accelerated, which is a natural tailwind for Digital Realty Trust. Whereas dividend growth has slightly outpaced funds from operations per share growth over the last decade, I believe the two will more closely match over the next decade and converge to sort of meet in the middle. That kind of high single-digit dividend growth, when paired with a 3% plus yield, is quite appealing. Moving over to the balance sheet, I've already foreshadowed the swelling of debt. That said, the company has acquired some valuable assets in exchange for more leverage. They do have $12.4 billion in total liabilities against $23.1 billion in total assets now. The company's investment grade credit ratings are as follows: BBB from S&P Global, Baa2 Moody's, and BBB Fitch. Moreover, many of their top tenants are world-class institutions with their own investment grade ratings. When investors think of a REIT, their minds might initially conjure up images of shopping malls and office space. Well, this REIT is nothing of the sort. Its differentiation positions it squarely in the middle of the ongoing technology evolution, which involves almost every facet of our everyday lives. Investors buying the stock now could be future-proofing their portfolios without paying the nosebleed prices that one will often find among other tech plays. And with global scale, switching costs, sticky assets, strategically placed properties that are purpose-built, and technological know-how, the company does benefit from competitive advantages. Of course, there are risks to consider. Litigation, regulation, and competition are omnipresent risks in every industry. As a company that participates in and benefits from the evolution in technology, any unforeseen changes in technology, which can happen rapidly, could be disadvantageous to Digital Realty Trust. The balance sheet has ballooned in recent years in an attempt to compete at scale, which leaves the company more vulnerable to interest rates and less flexible. This business model is capital intensive. Real estate is highly cyclical. This real estate is differentiated, but there's still an element of cyclicality to contend with. There's also a scarcity of competitive advantages in real estate, although Digital Realty Trust's unique real estate portfolio gives it advantages that I don't usually see in real estate. With these known, I still believe this stock should make for an excellent long-term investment. And with the stock still 15% off of its 52-week high, the valuation looks attractive right now. The stock is trading hands for a price to funds from operations ratio of 23, again using the midpoint of fiscal year 2020 core funds from operations per share guidance. This would be analogous to a price to earnings ratio for a regular stock. That might look slightly high at first glance, but I think it's more than reasonable for a business growing at the listed rate. I also consider the valuation on a relative basis. Almost any other high quality technology stock you'll find is trading at a much higher multiple than this. The price to cash flow ratio of 21.8 is a bit higher than its own 3-year average of 19.0, but the company now has additional assets and tailwinds it didn't have before. And the yield, as noted earlier, is pretty much in line with its recent historical average. I valued shares using a dividend discount model analysis. I factored in a 10% discount rate and a long-term dividend growth rate of 7%. This dividend growth rate is near the higher end of what I normally allow for, especially for a REIT, but I'm of the opinion that this business does deserve it. Both the long-term dividend growth and funds from operations per share growth have exceeded this mark. In the case of the former, the excess adds up to more than 150 basis points on an annualized basis. If anything, With the great possibility of an acceleration in growth, my factor dividend growth rate could prove to be conservative. However, I'd always rather err on the side of caution. The dividend discount model analysis gives me a fair value of $159.79. The reason I use a dividend discount model analysis is because a business is ultimately equal to the sum of all the future cash flow it can provide. The dividend discount model analysis is a tailored version of the discounted cash flow model analysis, as it simply substitutes dividends and dividend growth for cash flow and growth. It then discounts those future dividends back to the present day to account for the time value of money, since $1 tomorrow is not worth the same amount as $1 today. I find it to be a fairly accurate way to value dividend growth stocks. Morningstar rates DLR as a 3-star stock with a fair value estimate of $125. CFRA rates DLR as a 3-star hold with a 12-month target price of $170. I came out somewhere in the middle. Averaging the three numbers out gives us a final valuation of $151.60, which would indicate the stock is possibly 8% undervalued. Here's the bottom line, guys. Digital Realty Trust Inc. is a high-quality, differentiated REIT that has positioned itself squarely in the middle of a tech evolution that will increasingly digitize our lives. While the stock has done nothing but move up since I started putting together this analysis, reducing the level of undervaluation, I see this as one of the cheapest tech plays left. With a safe yield that's more than twice as high as the market, big dividend growth, almost 2 decades of dividend raises, and the potential that shares are 8% undervalued, this could be one of the best technology investments available to dividend growth investors in this market. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about this stock. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also, take a look at the description box below for some important links, including a link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.